our models are showing us now we've gone short just in the second half of October. We were long for most of the year in global stocks. We've now turned to a more defensive posture with a short position. I think that there's a number of macro risks that many of us here at the conference are talking about that just aren't going away. I mean, trade wars is top of the list by far. What's really interesting there is that it's having an impact on the Chinese economy. It's certainly having an impact on U.S. corporate earnings. We heard that in all the third quarter calls about people talking about supply chains and the impact there. And I think more importantly, there's a lot built up around the G20. And my personal perspective is there's a big bid-offer spread between what the U.S. and China want. And I think it's going to be hard to get a deal done. And the market's probably going to be disappointed. We could see a retest of the October lows.
But you think that, for a while, the U.S. market was obviously able to distance itself from some of the weakness around the world, whether it was in Asian markets and over in Europe, between not only what the markets were doing, but the economy. Now that's kind of feels like it's come home to roost.
Yeah, I think it's changed. I mean, when you think about kind of where the sell-off started in early October, a lot of it was around U.S. growth concerns and whether or not we're late in the cycle, so to speak. Last week was very telling when you looked at the Fed. They didn't say anything about the stock market volatility. They were very focused on continuing the rhetoric around hikes, keeping unemployment low and price stability. I thought that PPI print we saw last week that came in hot was very interesting, and we're going to be watching that CPI print to see whether it confirms this week. But I think the other thing is the midterm elections. You can't underweight the importance of whether or not the Trump administration and House Democrats will be able to get infrastructure done, get Tax 2.0 done, or will we have a lame duck for the next 2 years? That could be really damaging to the markets and overall sentiment.
From the Fed's perspective, though, what happens to your outlook if Powell backs off, so to speak?
I think there's been a history of Fed independence in this country, and I think that Powell will continue to, like Yellen, Bernanke, and those before him, I think he'll continue to look at the economic data, and they will be data dependent.
I mean, it doesn't necessarily have to be a independent thing. I'm not talking about just because the president has criticized Powell. I'm simply saying, look, the economy's slowing. There are signs that it's slowing. You mentioned what's been going on in the stock market. Is there an opportunity because of what's happened there for Powell to maybe stop hitting the gas pedal?
I think with low unemployment and with potentially seeing inflation starting to perk up with that tight labor market, I think they're going to continue to hike, and I think that the markets will react accordingly.
We had spoken with you throughout the years on oil and energy. What in the world's going on with crude, which you're short now? We are short WTI, but we're still long Brent. So we're more playing the spread here. We're not looking for a big move in oil in general. We're just playing that relationship, and I think in large part when you look at supply levels, they're extremely high in the U.S. All of the sell-off in oil started as a result of growth concerns in the U.S., and so it's, I think, something to watch. But the big thing, once again, is you heard from OPEC yesterday, between them and the president, they have very different views on where oil should be right now. And I think you're going to see a lot of volatility in the oil market going forward. The market that no one's talking about that shocks me is natural gas. It's up over 20% this month. It's been a good long for a lot of folks as we obviously feel the colder temperatures, not here in Florida, but obviously up at our friends in New York.